In this video, I'm going to talk about Micron, their valuation, and a little business overview. So, Micron, for people who aren't aware, they're a semiconductor company. Semiconductors are the chips that go into phones, computers, anything electronics you can think of. They are the brains, they are the storage, the memory. So, for Micron in particular, they do memory chips. There are two types of memory. And if you've ever used a computer before, or ever bought a computer, you're familiar. You have the RAM, and so Micron makes those, or they call them DRAM, which is dynamic RAM. And so that's going to help you kind of multitask with your computer. The more RAM you have, the easier it is to multitask. But once the computer's off, the DRAM resets. And so that's what makes it different from the other type of memory. Micron makes these memory chips, they call them NAND, which is a type of circuit. They go into what's called SSDs, solid state drives. And those are the new types of memory where in the past we used to have hard drives, which are these circular disks. Now they're able to put all of that memory actually on a chip, which makes it a lot more smaller. It's way faster. And that's kind of been Micron's bread and butter. So the two kind of major segments that's driving the company as of now is compute and networking and mobile. Compute and networking, you can think of the end markets as anything from the consumer side to the enterprise side. If you talk about the data centers that house a lot of people's data, the Micron chips are going into those. They're going into computers. Again, they're going into mobile. So your iPhone, your Android, whatever it is, chances are, depending on the device, you probably have a Micron either DRAM chip in there or a solid state device memory chip in there. And depending on the device, sometimes you can have both. So that's kind of where they've drawn the majority of the revenues. The revenues have grown more lately from the data center end market, and that does flow through into their different segments. It flows into the compute and networking and a few of the other segments as well. But obviously, that compute and networking drives a ton of the company's sales. Talking about some of their valuation metrics, just kind of common metrics to look at over the past 10 years, ROIC has been around 13.3%. It fluctuates a lot, but that's been the median. Their PE now is around 12 and a half. Price to book, price to sales, very low for a tech company. And their price to free cash flow is 18.5, which is also pretty low for a tech company. I should have put a graph of their ROIC so you could see, but this is a very, very cyclical company, and their returns on capital just are like this. It's like a roller coaster, and the ups and downs are pretty frequent. And that's just kind of the nature of the memory market for semiconductors, and a little bit more fluctuating than even the general economy and some of the other semiconductor companies, which does play into why that valuation can be so low. Because if you're looking at a PE today, well, what's that PE really worth if 2 out of the next 5 years you're going to have close to zero earnings or negative operating profit? So it's very hard to kind of take a snapshot of a valuation or PE and say that you can apply it to a company like Micron, because their profits are kind of very up and down. There's a lot of operating leverage, which means that when revenues are up, profits are up huge, but when revenues compress, you can get some losses or very, very slim profits. And so again, that goes into the returns on capital going way up and way down. Moving to the valuation. So this is the spreadsheet I use. It's part of the little package of valuation. I use the free cash flow, the equity model. And so I have my own kind of simplified version. To get to free cash flow to equity, I take a few metrics from the cash flow statement. So cash flow from operations, you subtract CapEx, take out any 1 year adjustments for working capital, and try to make a estimate for like a 10-year period. So that's where this number comes in. Make adjustments to deferred taxes. Those are kind of random every year. And then a stock-based compensation adjustment. So free cash flow to equity, I came out with $2.98, and running kind of a growth rate closer to where analysts are kind of looking at for the stock, something at 14%, you come out with a intrinsic value of 81. And so that's kind of close to where the company is trading at now. I would argue that if data centers are really the growth driver for the company, I looked at data center server companies like Lenovo, Dell, HPE, the actual physical servers, those have been growing at about 8% over the last 5 years. So it's hard to project something like 14% in my book, being kind of more conservative guy. Hard to project a 14% growth rate when the hardware itself is only growing around 8%. I know cloud's growing really high, but just because a cloud service provider like Azure or AWS is having those economies of scale doesn't mean that necessarily flows down to the hardware. And so that would include Micron, which goes into the hardware. If you do a valuation based off 8% growth instead of 14%, you get a much lower valuation.